Hey everyone, and welcome back to the channel. Today we're diving deep into one of the most fascinating and, let's be honest, sometimes frustrating markets out there: silver. For centuries it's been cherished as both money and a beautiful metal for jewelry. But in the modern world, silver's role has exploded, making it a critical component in everything from solar panels to smartphones. So, is silver just a poor man's gold, or is it a uniquely positioned asset with explosive potential? Let's break it down. First up, let's talk about volatility. If you've ever watched the silver price chart, you know it can be a wild ride. One day it's soaring, the next it's taking a nosedive. Why is that? A big reason is the size of the market. Compared to gold, the silver market is much smaller. This means that large buy or sell orders can have a much more dramatic impact on the price. Think of it like a small boat in a big ocean. It gets tossed around by the waves a lot more than a giant cruise ship. This volatility is also fueled by its dual nature. Silver is both a monetary metal, like gold, and an industrial metal. So its price is influenced not just by investor sentiment and currency fluctuations, but also by industrial demand and the overall health of the global economy. This dual identity makes it a very complex asset to predict, but also one with a unique story. Now, let's get into the demand side of the equation, because this is where things get really interesting. For years, the story around silver was about its use in photography. With the rise of digital cameras, that demand fell off a cliff. But just as one door closed, several others flew wide open. The biggest driver of industrial demand today is the green energy revolution. Silver is the most conductive metal on the planet, making it absolutely essential for solar panels. As the world transitions to renewable energy, the demand for photovoltaic cells is skyrocketing, and that means a massive appetite for silver. Every single solar panel needs it. On top of that, think about electric vehicles. They contain significantly more silver than traditional cars. And let's not forget our everyday electronics: smartphones, laptops, tablets. They all rely on silver for their circuitry. This industrial consumption is not optional. It's a necessity for modern technology to function. This creates a strong foundational demand that isn't going away. Then there's the investment side of demand, which is where things get really passionate. We're talking about physical silver. The coins, the bars, the stuff you can actually hold in your hand. This demand is often driven by a desire for a tangible asset, a hedge against inflation, and a form of wealth protection outside of the traditional financial system. When economic uncertainty rises or people lose faith in paper currencies, you often see a surge in demand for physical gold and silver. We saw this during the 2008 financial crisis and again during the recent pandemic. People rushed to buy coins and bars, sometimes leading to massive shortages at mints and dealers. Premiums, which is the amount you pay over the spot price, can go through the roof. This physical demand acts as another critical pillar supporting the silver price, and is driven by a very different set of factors than industrial demand. It's about psychology, trust, and the timeless appeal of real, hard assets. So we have surging industrial demand and a very committed base of physical investors. But what about the supply? Where does all this silver come from? The vast majority of silver, around 80%, is actually a byproduct of mining for other metals, primarily lead, zinc, copper, and gold. This is a crucial point. It means that the supply of silver isn't just determined by the price of silver itself. A mining company isn't going to open a massive new copper mine just because the price of silver has gone up a bit. Their main decision is based on the price of copper. This makes the supply of silver relatively inelastic. It can't respond quickly to changes in demand. If demand for silver suddenly doubles, miners can't just flip a switch and double production. It takes years, sometimes a decade or more, to find a deposit, get permits, and build a new mine. This supply inelasticity is a key part of the bull case for silver. If industrial and investment demand continue to grow, and supply can't keep up, basic economics tells us that the price has to go up. Furthermore, the mining sector is facing its own set of challenges. we're seeing what's called declining ore grades. This means that miners have to process more and more rock to get the same amount of silver they did in the past. This increases their costs for energy, water, and labor. Rising energy costs, in particular, are a huge headwind for mining companies. It just becomes more expensive to pull the metal out of the ground. Additionally, geopolitical risks are a growing concern. Many of the world's largest silver-producing regions, like Mexico and Peru, can face political instability, changing tax laws, or labor strikes, all of which can disrupt supply with little warning. All these factors combined suggest that bringing new, cheap, and easy silver supply to the market is going to be increasingly difficult in the years ahead. We might be approaching a point of peak silver production, where we simply can't mine it any faster than we already are. So let's put all the pieces together. On one hand, you have powerful, non-negotiable demand from essential industries like solar and electric vehicles. You have a dedicated base of global investors who buy physical silver as a safe haven. On the other hand, you have a constrained supply that can't easily respond to this rising demand, and it's facing increasing costs and risks. This fundamental imbalance between supply and demand is the core of the long-term bullish argument for silver. It suggests that the current price might not accurately reflect these powerful underlying dynamics. Many analysts look at the gold to silver ratio, which tracks how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has been much lower than it is today. A return to the historical average would imply a significantly higher silver price. Of course, no investment is without risk, and silver is no exception. Its price can be manipulated in the short term on the paper markets, and a major global recession could temporarily dampen industrial demand. You have to be prepared for the volatility we talked about earlier. But when you look at the long-term fundamental picture, the essential role it plays in our technological future, and the very real constraints on its supply, it is hard not to be optimistic. Silver isn't just a shiny rock, it's a critical strategic metal for the 21st century. Its story is one of a transition from an old world monetary asset to a new world indispensable commodity. The question isn't whether the demand will be there, it's whether the supply can possibly keep up. And that's a question that could have some very profitable answers for those paying attention. What do you guys think? Are you bullish on silver? Are you stacking coins and bars? Or are you investing in mining stocks? Let me know your thoughts down in the comments. I read every single one. Thanks so much for watching today. If you got any value from this video, please give it a thumbs up and consider subscribing for more deep dives into the markets. We'll see you in the next one.